Hey everyone, this is my quarterly, sometimes monthly update in which I outline any major changes to my stock portfolio for those following my trading strategy. During February, my portfolio briefly surpassed 120% in gains for the past 12 months. However, the market entered a correction during the last week of Feb, meaning we've given a small portion of those gains back. However, these corrections are completely normal, and it's just about rotating our portfolio and positioning ourselves perfectly for when stocks take off again. So stay tuned, because here are all of the stocks that I've added and removed from my portfolio in Feb. Firstly, I wanted to start by highlighting the best performers in our stock portfolio for the month of February. Despite many other stocks in the portfolio performing well over the past month, these 5 stocks have delivered us enormous gains and were the standout performers. In fact, you may recognize some of the names above from previous posts on 10 stocks that should double in 2021. February was a particularly volatile month, with many stocks hitting all-time highs before the sharp correction last week caused many investors to end the month in red. Yet fortunately, I was still able to grow my investments by almost 10% last month. I'd been expecting a correction for a while now, and having built a 20% cash position in my portfolio, I was able to take advantage of the recent pullback in share prices. So let's start with my new positions. Firstly, I added data analytics provider PALANTIR, which I've been watching for a few months now. If you haven't already, make sure to check out my video on 5 things to know before buying PALANTIR. At the time of that video, I thought PALANTIR was overvalued, but after falling to $25 from $40, I decided to open a half position in the stock. Secondly then is hydrogen fuel cell company Plug Power, an industry leader who's began partnering with major car manufacturers like Renault to develop electric vehicles. The third stock that I added to my portfolio last week was Vestas, ticker VWS, because the Danish manufacturer of wind turbines recently announced that they'd be producing the world's largest offshore turbines, roughly the same size of London's tallest skyscraper, the Shard. So those are 3 brand new entries to my portfolio, but I also heavily increased my investments in 5 other stocks. First of all is one of my favourite stocks right now, and that's gaming software giant Unity. It's now one of my largest holdings, and you can check out the reasons why I love the stock in a video that I posted a couple of weeks ago. Next up is NextEra, which is an American clean energy company that now pays a 2% dividend after its recent pullback. It's quite hard to find a dividend that high outside of banking, utilities or oil and gas, let alone within a long-term growth industry like green energy. Another green energy stock that I've increased my exposure to over the past couple of days is SolarEdge. This fast-growing solar stock tends to fall sharply during broader market corrections, but is usually one of the first out of the gates once the market steadies and rebounds. The fourth stock that I've added to, and probably the one that I've increased my position most within, is British online fashion retailer Asos. It's now one of my largest positions, along with Google, Unity and Adidas Medicine, and I've got a video lined up telling you 5 reasons why I think this stock will at least double, so click subscribe and stay tuned for that. Lastly, the 5th stock that I've meaningfully increased my exposure to is Netflix. I truly believe that this stock could one day be worth $1 trillion, and therefore I think it represents an opportunity to 4x from here, so make sure to check out my video explaining 5 reasons why I think Netflix is a top investment. So there are the 8 stocks that I've added to recently, but here are 2 that I've reduced my investments in, starting with Cardano. ADA recently became the 3rd largest cryptocurrency by market cap, and I like the project, yet I still think it can go higher, but after rising 300% last month, I'm starting to see considerable downside risk, and therefore I've taken some profits off the table and put it to work in some recently oversold tech stocks. Another stock that I took some profits in last week was Boeing, mostly because it was hardly affected during the recent tech sell-off, and therefore I've used some of my investment in the airplane manufacturer to take advantage of more severely bruised stocks that I think could outperform in the near term. As you can see, I took the recent sell-off as an opportunity to buy shares in stocks trading at a steep discount to where they were valued just a few days ago. Having been through many corrections in the past, I've learned that this type of selling is temporary and can be exploited, as the stats don't lie and they show us that the market experiences an average of 3 corrections per year, whilst there have been 7 dips in the market since the March lows, with an average drop of 7%. Therefore, as much as it hurts to watch your stocks fall, that's just part of the process, and you have to get comfortable with this if you want to invest successfully in the stock market. If you find this difficult, then take a second and check out my post on the most common mistakes that all new investors make, and my top 10 tips on how to avoid them by clicking the link in the description. So after a month that has involved a lot more trades than usual, I believe we've capitalized on some great long-term stocks, and my portfolio is now well balanced to somewhat protect the gains that we've captured in Q1, whilst ensuring that we're well positioned positioned to continue benefiting from the mega growth trends that we've identified. Not only do we have exposure to a number of these growth industries, but through continuous and vigorous analysis, we'll continue to identify and own shares of the best companies within them. Finally, I'd like to say well done to every investor who refused to be shaken out during last week's correction. Remember, the saying is buy low, sell high, not sell low and buy high. I hope you enjoyed the video, especially if you're somebody who invests with me on eToro. If not and you're looking to get started, then you can sign up via the link in the description and you can start copying my portfolio for free. It's an incredible feature and it's fully automatic, and that means you can benefit from the stock market exactly the same way I do without having to put in any of the time or effort. So if you want to sign up and join the 1.7k investors who copy my portfolio for free, then you can do so by clicking the link below. I'll get a small referral fee, which is pretty cool, but not the reason that I make these videos. Remember guys, I'm not a financial advisor and therefore this is not financial advice, but hopefully you found the video interesting, and if you did, please click like. It really helps the channel, and the better it does, the more quality videos I can bring you. Better yet, subscribe. I've got loads of cool videos in the pipeline. If you're a subscriber, then you'll know when my new videos come out and you'll be more likely to save or make yourself some money on the stock market. So stay tuned and remember that your money should be working for you and not the other way around.